Let's go down to the 4-hour time frame. Okay, guys, so now we see on the 4-hour time frame. Okay, so we can see that we are moving lower. We had low, lower high, lower low, lower high, lower low, and relatively equal there, and we rejected it. And we're currently aiming to reach for liquidity that's resting above here. Okay, so on the 4-hour time frame, we can actually say that we are going to be looking at these levels here for possible targets intraday. Okay, so this level there, possibly looking for the market to attack that level there, grab some liquidity. We're looking for a false breakout, and we're going to be trading it down in line with the higher time frame trend, which is bearish. Okay, guys, so we're looking for selling opportunities at this level. So let's go back out there. Okay, so on the 4-hour, we have that level, and we're going to label this. Let me make this bigger. As we can also see, this also is a form of resistance. Okay, we call this resistance, or we can just call this relatively equal highs here, and it coincides with the daily swing high. So very, very nice level to be aware of. Let's change that to the same as the daily. Okay, and we'll label that relatively equal highs. Okay, so we know that there is liquidity resting above there. We want the market to go and grab that liquidity, show a breaking market structure, and we trade it back down lower in line with the higher time frame trend. Okay, guys, so now we're going to look at the 1 hour. If we can see anything on the 1 hour. So here we see we had a massive displacement. Okay, so there is a price imbalance in here. Basically, what that means is the market only provided sell side liquidity here and move lower without offering any buyer to get in. So the market has to rebalance and come back up into this level here. So now we've added confluence to our trading. We know that we have equal highs up here or resistance here, where many traders have placed their stop losses that were going short. Okay, so they have protective stops above there in the form of buy stops. Okay, so the market will be most likely to aim to that level. So we have an imbalance that needs to be filled. We have a zone of resistance. We have equal highs, and we are in a downtrend, guys. So everything is lining up for us to take a sell at this level. The one thing we need to wait for is a shift in market structure. Okay, so we look at the 1 hour time frame. Okay, let's see if we can see something here. So now we're going to be looking for equal highs and equal lows. Okay, and let's see if we can see some here. Okay, I look at this level. This level is very interesting to me. Okay, so whoever caught this move up higher would have their stop losses below this level. Okay, so what we will do is we will label that relatively equal lows. And let's get the low of this candle here at 13,832.6. 13,832.6. Okay, and we've got that level. So our eye will actually be at this level as a target. Okay, guys. So we'll be looking to do that there. Okay, so that's for the 1 hour time frame. And remember, this is our dealing range, okay, for the daily. In regards to our swing high and swing low, or daily high and daily low. So this is our dealing range. Okay, this level here. Okay, great. Okay, so now we're going to come down to the 15-minute time frame, guys. So here on the 15-minute time frame, okay, let's go back to the 4 hour time frame just to show you something here. We can also use the 20 and the 50 to determine our order flow on that time frame. And as we see, we are trading below the 20 and the 50. So we're looking for a false break, guys. So here again is another piece of confluence, okay, that adds to our bias that we are looking for lower prices, that we are below the 50 and the 20. We're looking for a false break, grab of liquidity, shift in market structure, and trade right down lower. If we break this level, we'll be looking to hold our trade until this weekly swing low. Okay, Very simple stuff, guys. So let's go back to the 15-minute time frame. Okay, so now we have a look at the 15-minute time frame. We can see more clear price action. Okay, so here we are going to be looking for things like relatively equal highs, relatively equal lows, and order blocks, etc. Okay, so here we can see this level is nice and clean. Okay, so definitely liquidity resting below here. Okay, so now on the 15-minute time frame, guys, what I'm going to do is ask myself, where is the market headed? Are we likely to move higher or lower? Okay, so I'm gonna mark out here midnight New York, and let's get it. Okay, beginning of a new trading day. Okay, and today is Thursday. Let's just mark out the previous days as well. There, and there, one more. Okay. Monday, Tuesday, Wednesday, Thursday. Good. Okay, so now we have our daily separated according to the New York local time. Okay, guys, so now I'm going to have a look here on the 15-minute time frame. We're going to look for levels, okay? So immediately this jumps out to me. We see a price imbalance here that the market is coming back into to fill, okay? And we also see a shift here. We have a low that's been taken out there. Okay, and what caused this massive move down lower? Let's look for the last up close candle, which will then be our bearish order block. Okay, so let's look here. So this level here, I can see there we have an order block there. Why is it a valid order block? Because we've been moving higher, consolidated, we moved higher, and we had a shift. We broke this previous higher low, and we broke it with massive displacements. Okay, so this or these few consolidation candles will be our reference for our order block. And another thing, guys, it is also in confluence with our relatively equal highs and relatively equal highs, zone of resistance, and the daily high. So this is a very important level that we'll be watching, guys. And we also have a price imbalance here. So a lot of factors are contributing to our trade idea that we're going to reach up here, break, have a shift in market structure, and then attack these lows. So we're looking for selling opportunities, but we want to have a shift in market structure to confirm our entry. Okay, so we can highlight this here and say we have a 15-minute break of structure. Okay, great. And now we just wait. So that's how we formulate a trade idea, so guys. So we're waiting for the market to do this, create higher highs and higher lows into and beyond this area, grabbing the liquidity that's resting there above our relatively equal highs, above our resistance, if you're using supporting resistance zones, above the daily high, if you're using that. So many factors, okay? And also our exponential moving averages, okay? We're looking for price to pierce through them. And once we see that, we simply looking for this, guys, a shift. And for the price to return back to this level here, you could find another order block there or wherever the lower high is. And we're simply looking for something like that and targeting those lows there. Very simple, guys. And we can actually go into it like this. You can set a limit order once the price has broken this level there. And we can aim for this target They're very simple, and that can give you at least a 5-hour trade. Or you can actually wait for price to go there, pierce through, and then wait, and then wait patiently for a shift in market structure. When I say a shift, I mean we made a high here, we made a low, higher high, higher low, higher high, higher low, lower high, lower low. That is a shift in market structure. Once we see that, we can enter on the pullback up, and we can use probably a candlestick pattern, bearish engulfing, or some type of candlestick pattern that you are familiar with, or you can just enter the trade after the pullback. That's what I usually do. And we can have our stop loss then above the previous lower high, and then we can aim for our target here. Okay, so we can get a more cleaner entry if we wait for a shift in market structure, and we get less riskier trade. Very simple, guys. And that's how we use all the information that's been shared in the course content to formulate our trade ideas. I hope you enjoyed this video, guys, and I will see you in the next video.